Hello and welcome to this July 29th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Bowley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring Jones Apparel Group, ticker symbol JNY. This is about a $1.5 billion consumer discretionary company. JNY actually reported earnings on Wednesday morning. The earnings were better than expected. You can see from the chart we had a gap up off of this very nice uptrend, so the market was starting to anticipate some pretty good news. We gapped up. We traded above the 50-day moving average by quite a bit intraday. Looked very strong, got up to the 200-day moving average, and then completely reversed. Came back down, closed near the low of the day on very heavy volume, printing a shooting star black candlestick. That is a reversing candle. The failure at the 50-day also very negative. And take a look at where prior price support was here at $17, and then we had gapped down below 17 at the end of June and into early July, and then we were just getting back up, testing this gap resistance and price resistance area, and it looked like we were taking all of this resistance out intraday before the major reversal late in the day, and then the week finish into the close. So JNY looks to me like off of this uptrend we've put in a reversing candlestick. Let's not lose sight of the fact that we are in a downtrend. Actually, we could have drawn a trend line here that was held on this reversal on Wednesday as well. So we've got the downtrend in play. We did have some nice strength over the course of the last week or week and a half. That came off of a long-term positive divergence. So even though prices were moving lower into the middle part of July, it was showing us, this divergence was showing us that the momentum was slowing on the sell side, and that's when we had the reversing candle right here, a piercing candle, and we turned around and went right up over the next several days, like I said, into the earnings report today, and then failing on the 50-day. So with that, it looks to me like JNY is prepared for a move to the downside. We would use the top of the candle as a intraday stop. You could consider the 50-day moving average maybe for a closing stop. That's a little bit closer. It's only about 2.5% away from where we finished on Wednesday. To the downside, you're going to have a couple of short-term support areas. The first one is your price support around 16.25. That's where we broke out from the earlier July high. We broke above that level, so that could serve as a little bit of support when we get back down there. Also, the 20-day moving average, which was turning up here over the last few days, is now at 16.05 and rising. So the combination of those two levels, we should see a little bit of support on the downside. But if that level is lost, or that area is lost to the downside, then we would look all the way down to this mid-July low, just below $14. That's where ultimately we think JNY could go. The RSI sitting at 55. Stochastics right now at 88. They were up in the mid-90s just a couple of days ago. So the combination in a downtrending stock, anytime you see the stochastics up in the 90s and RSI approaching 60, that's generally a pretty good time to take a shot on the short side. And that's the way we are viewing JNY at this point in time. I hope you've enjoyed this presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.